Let's take a look at some legacy charts for Brave New Coin on this beautiful sunny Thursday afternoon. I'm going to look at these top 3 charts I'm really paying attention to for crypto first. BTC still ranging, lots of volume here. Just trying to establish something bottomy, potentially white coffee in, but ultimately I'm just watching this downward pitchfork. ETH looks tragically awful, parabolic downside. It really needs to hold on to this 200-day moving average, or things are going to get ugly fast. This may end up being an ascending broadening wedge. I think there's probably not enough touches on the top side of this, but there's very clearly, or at least was, some sort of ascending diagonal support line there. And if this does drop, 600, again, I don't like it, you don't like it, but that's where the market wants it to go. And this DeFi perp still looks like it's trying to figure out what's going on here. Still hasn't death crossed yet. So with all that in mind, looking at the usual suspects here, the VIX, the Dixie, gold, SPX, NASDAQ correlations. The VIX did rise slightly, but now it's back down to kind of a new monthly low over the past week. The lower this goes, the better for crypto. Historically, rising VIX is risk off, so falling VIX is more risk on. It's still extremely high historically for where the VIX likes to live, volatility index. The Dixie correlations haven't really made sense, but ultimately if there's strength in the Dixie, that's also risk off, which is more bearish for BTC. We still are heavily inverse correlated to gold, which tells me we definitely aren't a risk-off vehicle. We're more risk-on than anything, and we're still pretty correlated with SPX and NASDAQ, which again echoes risk-on sentiment for BTC. DXY, still watching this 4-hour. It's trying, sorry, this is the daily. I thought this was a 4-hour. It's trying to break above on the daily 200, so that's certainly not bullish, or not bullish for BTC, bullish for the Dixie, obviously. And we still have that, I don't have it on here, but this inverted head and shoulders situation with a mean reversion potential to 96. And that would not be bullish for BTC. Now, does that make sense? Based on the fundamentals of what's going on with repos and the dollar and printing and all that other stuff, not really. Doesn't really make sense for Dixie to outperform everything else in the index. The US dollar to perform everything else out in the index, but technicals like up, and that is not good. No bueno for BTC. Gold got smashed, as did silver over the past week. I don't know what to call silver as far as risk on or risk off, but the ascending triangle still looks fine to me for upside. It's on the weekly. It's going to take forever to play out. Gold never had the bullish TK cross on the cloud, so there's definitely a divergence on all that rise to the upside, and this may end up retracing back to that 1670 target. If it does that, you'd expect a lot of inverse reaction on SPX and NASDAQ. Let's say we shoot through the R1 yearly pivot on SPX, go to some crazy value like 4,800 because money printing or something policy related. That's certainly much more bullish for crypto and gives us a better chance at bottoming. There's still this TK disequilibrium here on the cloud, on the weekly chart. And if this fails at the R1, I like 3,300. Which is a pretty significant pullback for that. NDX also just a forever bear div. A multi-month, almost multi-year bear div on NASDAQ. So I don't have any confidence in this stuff at these highs. I would not be piling on to anything up here. GME, meanwhile, in meme stonk land, still looks like it could shoot higher. 2x, 3x, definitely crazily still on the table. Continues to put in higher lows here, reminiscent of Adam and Eve or ascending triangle, whatever it is, it's bullish. Still hasn't broken below the 50% retracement from high to low, so it still looks fine. Until this puts in a lower low, this probably goes higher. AMC also kind of crazy, it's just sitting here at 56. I don't think there's anything necessarily pattern-wise up here. There was like a low time frame inverted head and shoulders thing. Maybe this is just a high and tight bull flag, but this also does not look reversally just yet. It looks fine up here at 57 and could also go higher. And Bed Bath & Beyond also had this crazy weekly spikes, ticks up. So all this stuff continues to just outperform reality. Here's a descending broadening wedge, probably one of the best ones you'll ever see with this bullish divergence. This one you can call pretty easily because it tapped both of these support resist diags several times, broke out where it should have, right? Like all of this makes sense. Now you're putting in bearish divergence on these higher highs. So I don't know if this goes higher. You know, it's better if we don't. It's better if Doge goes significantly lower. Even though it did tap the 200-day moving average, it's part of the meme stonk conversation to people who trade on Robinhood. It did have this head and shoulders. You know, all of this looks like it wants to go lower eventually. Definitely more bearish than AMC, GME, BBBY even. We need a flushing out. We need to burn the forest floor to allow some new growth here. And for Doge, that's back to the previous consolidation at around 5 cents, 5, 6 cents, something like that. MSTR, another stock to watch relative to BTC because 80% plus of the price action correlation is held against BTC in a positive direction. So if this starts to turn, let's say this goes above 800 and BTC is still sub 42K, there's a pretty decent chance that there will be a bullish catch-up trade for BTC in that case. Kind of indicates a sentiment shift on the institutional side of things because anybody buying this is only looking at it as like a BTC ETF, basically. They aren't like bullish on MicroStrategy and their ability as a company to make revenue. You know, none of that. We're well beyond reality for MicroStrategy being a company other than a BTC holding strategy. Tesla still looks like it's setting in an eventual death cross. Mega retracement, 50% at least. It's up today on some New York City charging EV news. I don't know. But it still doesn't look like it wants bullish continuation. Maybe you trade this from here to 880. Maybe the descending triangle is broken, but it doesn't look bullish. Coin finally, maybe, possibly, potentially putting in this falling wedge bull div on the hourly. You can't really look at it on high time frames because just not enough trading days yet. But it is putting in lower lows and less momentum. Kathy Wood at ARK just keeps buying coin left and right. She's buying GBTC and she's buying all sorts of stuff that doesn't really make much sense. But if this plays out as a falling wedge, you'll see this hourly 5200 cross. And you'll probably see this potentially back to 333, something like that. Kind of post listing low back up there because there's a lot of volume changing hands here in this range. So it looks like it may finally have a shot at some upside. Square looks better than I thought it would. I had some Square personally that I sold a couple weeks ago. Looked like it was about to break down below this 200-day moving average. It bounced. Looked like it had diamond top, multi-headed head and shoulders, whatever this was. It didn't look good. But now it's flipping back up again. Still kind of stuck in this RSI downtrend though. So you definitely want to see this break to the upside into overbought territory. And you'll probably see new all-time highs for Square if that's the case. GBTC also in this downward RSI trend below the cloud, below the 200. I mean, it looks just as bad as spot BTC does, but I'm sure there are people who just trade this chart and don't pay attention to spot necessarily. ETH more of the same. Tons of volume here, but it's below the cloud, below the 200. RSI not quite yet in oversold territory. And the discounts for ETH are growing and the discounts for GBTC are shrinking slightly. Ultimately, you know, these charts are probably governed by that discount, that premium, that arb trade that's falling apart at this point. Now there's a potential like inverse arb trade where you're expecting this stuff to go back to spot parity, which may never happen, as there's just a continual unlock period for all these products. Really, anybody who's bought anything 6 to 12 months ago finally gets the opportunity to sell. And that's why things like LTC are still at 1,000% premium, because the cash and carry arb trade hasn't yet kicked in for those sells. It's not that, you know, people are so bullish on LTC that there's 1,000% premium there. And then the CME futures rollover is mañana, tomorrow. And these biannual contracts, historically, we're currently in one that doesn't expire until the 24th of September. historically they've been one way highway, up or down. And if we roll over and immediately begin lower lows, the assumption for me is quite simple. We are bearish until the 24th of September, or after, slightly after, when that rollover happens. So right now, everything still leans more bearish than bullish, more risk off than risk on. And that isn't going to help us crypto-wise in the near term. I'll just mention the ETH-BTC fund that I trade for Techemy Capital, Enzyme Finance, as well as the DeFi portfolio. Both of these are currently in 100% Aave USDC, but they are non-custodial portfolio management tools where you can send ETH or USDC or just watch what I'm doing. You can see performance, allocation, deposits, withdrawals, all the trades I make, all done through DEXs. You can see everything I'm doing and where I'm doing it and for what sizes. We did have around 15 DeFi coins that I basically had to cut because they were all, down significantly. We weren't going to just hold this to zero. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.